Hello, my name is Troy Adkins, and I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a housing advisory services company. I want to talk to you today about the key events that have transpired in the U.S. residential housing market during the first quarter of 2025. During the first quarter of this year, an analytical overview by Adkins Capital Management of the pre-purchase, ownership, and selling phase issues that can lead to a bad home purchase, and the monetary policy actions of the Federal Reserve to accommodate financial conditions that support economic growth amid concerns about inflation and a cooling labor market were the primary topics of conversation. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Adkins 60 City Home Price Index, and it provides a wealth of information for prospective home buyers to use to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Adkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. ACM is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 20 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, more than 8 years of freelance financial and investment writing experience, and more than 5 years of state government experience at the agency and legislative levels. I am also the author of more than 25 published financial and investment articles. Accordingly, I am a 2023 inductee into Marquis Who's Who. For more information about my background, skills, and experience, please visit the Adkins Capital Management website. During the first quarter of 2025, research conducted by Adkins Capital Management found that there are 12 critical factors that make owning a home a costly mistake. This summary offers key insights developed by ACM of the 3 purchase issues that need to be addressed. First is emotional bias. Emotional attachment or pressure can cause a prospective homebuyer to overlook significant flaws or overpay because the person has fallen in love with the property. This often leads to ignoring long-term costs like commuting times, zoning laws, or resale potential. Second is opportunity cost. An opportunity cost arises when you could be earning investment income if you had invested your down payment and other funds elsewhere, such as in stocks or bonds. This is a critical consideration before the purchase of a house. The magnitude of an opportunity cost can be significant because a diversified investment portfolio could yield a 7 to 10% annual return, compounding significantly over time. And third is market risk. The moment you decide to buy a house, you are exposed to market risk. Buying at a peak in house prices can cause you to end up underwater, meaning you owe more on your mortgage loan than the house is worth if the market declines. This is especially true in overheated or speculative markets, particularly if there are material changes in the national average mortgage loan interest rate environment. When considering the purchase of a house, there are 5 ownership issues that need to be addressed. The first is low appreciation versus high costs. While your home may appreciate over the long term, its value might not outpace the rising cost of ownership, leading to a negative real return. Historically, homes often appreciate at a rate that barely keeps up with inflation. whereas the associated costs associated with owning a house typically rise faster. Second are property taxes and private mortgage insurance. Taxes and PMI are some of the first ongoing costs you'll face. If you have a small down payment, you'll immediately begin paying PMI, in addition to regular property taxes. PMI costs can add between 0.5% to 1% to your costs annually. Additionally, property taxes can increase over time due to reassessments. Property taxes run in the range of 0.18% and 1.89%. Third are maintenance and repairs. M&R costs are continuous expenses throughout your ownership. You'll need to budget for everything from routine upkeep to unpredictable and expensive repairs, which can significantly impact your finances. Research has found that homeowners should expect to spend about 1% of a home's value annually on maintenance. However, these costs can be unpredictable and rise sharply for older homes, significantly impacting the total cost of ownership. Homeowners' insurance premiums are another factor to take into account. Insurance is another ongoing expense, and its cost can rise dramatically over time, especially if your home is in a high-risk area for floods or fires or even hail or earthquakes. Crime and vandalism are also issues that need to be taken into account. Perhaps as importantly, insurance premiums can spike after a claim is filed. Finally, lifestyle misalignment is another factor that needs to be taken into account. This is a risk that emerges as your life changes. What was once the perfect home may no longer fit your needs due to a new job, family changes, health issues, or other unforeseen circumstances, which can render your home unsuitable for your needs and have a negative impact on your finances. When considering the purchase of a house, there are 4 selling issues that need to be addressed. First is the liquidity trap. When you decide to sell your house, it can be difficult to sell quickly without making a significant price reduction. Second are holding costs. Once your home is on the market, you'll face ongoing expenses like mortgage payments, taxes, utilities, insurance, and maintenance that you pay while waiting for your house to sell. Third are high transaction costs. After you find a buyer, you'll deal with the high cost of the sale itself, including agent commissions, closing costs, and other fees that can eat into your profits. Moving costs will also be incurred to complete the transaction. And finally, a fourth cost needs to be taken into account, which is probate. Probate is the final potential step in the home ownership timeline. Probate is a legal process that occurs after the homeowner's death. It can be a costly and time-consuming process that delays the transfer or sale of a property. During probate, the court validates the homeowner's will and manages the estate, and the home might even be sold to cover outstanding debts. With this overview of the ACM research in mind, let me now turn your attention to our analysis of the Federal Reserve's monetary policy. The general theme of this section is that the Federal Reserve opted to maintain interest rates at the same level during the quarter, citing somewhat elevated inflation and a strong labor market. During the first quarter of this year, the Federal Reserve maintained a cautious approach to monetary policy, focusing on balancing inflation control with economic growth. The Federal Open Market Committee decided to maintain the federal funds rate at a target range of 4.25% to 4.5%. The Federal Reserve noted that housing affordability remained a significant challenge in early 2025, driven by elevated mortgage rates, high home prices, and constrained supply. While some regional price stabilization occurred, broader market uncertainty persisted. the Fed emphasized the importance of housing trends in shaping its economic outlook. Due to a host of economic factors, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the quarter at 7.07% and ended the quarter at 6.65%. The national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 2.67% on December 17th of 2020 and the all-time high of 18.63% in October of 1981. The spread between mortgage rates and treasury yields remained elevated, driven by reduced demand for mortgage-backed securities and heightened concerns about prepayment risk. These factors contributed to persistently high mortgage rates, even as the Federal Reserve maintained its benchmark rate and adopted a cautious stance on future cuts. Additionally, housing affordability remained a significant challenge in the first quarter of 2025, as elevated mortgage rates and persistent supply constraints kept home prices high despite rising inventory. Buyer demand continued to strain affordability, especially in high-growth regions. Policymakers and analysts highlighted the need to address structural barriers, such as zoning restrictions and construction costs, to support long-term housing stability. In short, Q1 of 2025 was a paradox. More homes were listed, but fewer were truly affordable. The Fed held rates steady, but secondary market dynamics, like mortgage-backed security spreads and prepayment risk, kept mortgage rates elevated. Policymakers flagged structural issues like zoning and supply bottlenecks, but no major reforms landed during the quarter. With this overview of the Federal Reserve's monetary policy actions in mind, let me now explain the proprietary analytical methodology that was developed by Adkins Capital Management to analyze the home price level of the cities that constitute the Adkins 60 City Home Price Index. From a finance-based perspective, our proprietary valuation methodology analyzes the relationship between home price levels, household income levels, the percentage of pre-tax household income allocated to housing, and the cost of debt for a 30-year fixed-rate mortgage loan. From the first analytical perspective, our valuation methodology calculates the justified mortgage loan interest rate, which represents the cost of debt that justifies the home price level with the household income level, taking into account that 28% of household income will be allocated to servicing the mortgage loan. From the second analytical perspective, our valuation methodology calculates the justified percentage of household income amount, which represents the percentage of pre-tax household income that justifies the home price level with the household income level, taking into account the prevailing national average mortgage loan interest rate. Based on Adkins Capital Management's proprietary housing analytical methodology, this section of our presentation pertains to ACM's comprehensive housing analyses. The general theme of this section is that an overwhelming majority of cities, 56 out of 60, featured in the Adkins Home Price Index, are flagged for housing prices that exceed sustainable levels. The 56 cities in the Adkins 60 City Home Price Index were classified as overpriced for the first quarter of 2025, based upon the justified percentage of household income amount. New York City, San Francisco, Los Angeles, Newark, and Miami were identified as the 5 most overpriced cities in the index. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate from 6.65% to 0%. In addition, In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities as underpriced, because prospective home buyers would have to spend more than the respective justified percentage of household income amounts, which fall within the unrealistic range of 76% to 85% of household income. Therefore, in order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $134,675 and $400,680. Moreover, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $175,976 and $513,942. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. On the other side of the spectrum, based upon the justified percentage of household income amount, only 4 cities in the Adkins 60 City Home Price Index were classified as underpriced for the first quarter of 2025. Detroit, Jackson, Fargo, and Des Moines were identified as the top 4 most underpriced cities in the index. In order to classify homes in the top 4 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 6.65% to more than the respective justified mortgage loan interest rate amount for each city, which fell within the range of 2.05% and 11.85%. Or it would have to be deemed imprudent by prospective home buyers to spend as much as the respective justified percentage of household income amount for each city to repay the cost of a mortgage loan. Now that our quarterly residential housing market review is complete, here is some valuable information that you should consider. First, you can conduct similar housing analyses for your community and for your specific home purchase opportunities by subscribing to use the Adkins Residential Home Valuation Analyzer on Amazon.com. Simply search for residential real estate software to watch our 15-minute movie presentation and to subscribe to use our software. Second, there is a wealth of additional housing information on the Adkins Capital Management website, including our comprehensive home price index, interactive map of city housing analyses, newsfeed of pertinent housing information, housing methodology patent application, reverse mortgage loan analysis, movie catalog of quarterly residential housing market reviews, housing valuation methodology presentations, and tactical and strategic residential real estate hedge fund model portfolio. By visiting ACM, you can gain valuable insights into the housing market and make well-informed home purchase decisions. This is Troy Adkins saying thank you for taking the time to listen to this presentation.